it just continued. Man, the market was crazy.
Yeah, we got some relief today, which is good because it let a lot of us readjust our options and get out some crap and get into some new stuff.
Relief. I made the most money yesterday.
Yesterday, we had a bunch of naked calls on, or what?
No, I put in an order for what was it? Oh, AMC. I think it was on Monday or Tuesday. It's like 100 shares, and then I started scaling out through the after hours trading. And then I'm like, okay, I got 50 shares left, until the morning. I'm like, it's never gonna really go anywhere. So I put in a sell limit order at 12, and then at 15. When I got it, it's like 180 something. So I wake up in the morning, I look at my phone, and it's like, oh, your order's filled. I'm like, well, great.
Well, you got lucky before they shut everything down.
I know. It's a crazy ride.
Where's our host at?
Trying to get my camera to come on.
No, he's here. Maybe. Yeah, you can figure out how to not have a recording. Dude, Randy, your recording didn't even match what people were saying. Like, literally, the video and sound were all jacked up.
Where's my camera here?
Well, I guess I'm going to go without a camera. It's not coming on.
No, we want to see what shirt you're wearing today.
It's the plaid one.
Which one? What color?
Blue. Yeah, some reason OBS doesn't like Discord. You have to start them up in a funky order to get the camera to work.
Yeah, OBS is a real pain in the ass. Use something else.
I don't want to learn something else right now.
Pay somebody to learn it for you. All right, who got hurt this week? I know some people got hurt.
Nobody's going to admit it.
Options wise, who's got hurt here?
Hey guys, I got lucky. My IB account just got approved for options. I might have gotten a...
So you got approved after the whole debacle is what you're saying?
Well, yeah, I don't know why it took that long. Almost like 10 times a month I could do anything. I moved my options portfolio from TD Ameritrade to IB, and it, I don't know how long it didn't work. So almost like more than 3 weeks.
Who's talking? Got a lot of feedback. Bunch of shy folks here.
Yeah. Well, I almost got in the money on my vertical spread on Nvidia. That came very close today. It actually went.
Yesterday?
Yeah.
Yeah, a lot of stuff was under pressure yesterday. I didn't lose sleep over it, but if we had another down day today, I'm sure a lot of us would have been into some pain big time. Luckily, we got a little bit of relief today, and let us, kind of jockey some crap around. And I do think the market's going to go lower. It's just looked like kind of like a weak dead cat bounce. All right, P. I know you got hurt this week. Tell us a little bit about Yep.
Uh, yeah, it stung a little bit. Um, didn't realize it was gonna go as crazy parabolic as it did. Got in trying to just scoop up a little bit of premium. I think I sold some naked calls when GameStop was at like $25 for like $60. And then it like immediately, within an hour, I had to roll it out. And this was still when they only had $60 calls or $60 strikes available. So I rolled it out to January 2023, and then it just kept getting worse and worse. Got a little bit better for a second, where I was only down about 15 grand, and then luckily I was in another group where some option dudes that know a lot more than me. Because I literally got on a Zoom call with me and walked me through and was like, buy this option right now. You're going to lose 50 grand, but it's going to stop your bleeding. So that's what I did. Stop the blood.
So you sold to open some leaps. Why didn't you just hold those? I mean,
No,
the thing is,
so I sold naked calls on them. So it had
right. You roll out to leaps, right?
Yeah, well, I just rolled out that call, yeah, but it was as it continued going against me, that difference between the 60 that somebody could call it away from me at, and when it was hitting 150
Gotcha.
and 200, I didn't even realize that they margin called me and liquidated all my positions except GameStop. So luckily they didn't do that one, but when they liquidated, about half of my positions were profitable, the other half weren't, so I lost like 4 grand there. And then when I bought a $100 call on GameStop for the same date, and that's what plugged the hole. So right now I've got a $60 call that I sold and a $100 call that I bought for the same date, essentially just holding each other at bay right now.
Gotcha. I mean, honestly, hindsight's 2020. I hate saying that because when you first started trading GameStop, you probably had no idea really what was even going on behind the scenes. It's just like, oh, maybe there's some good news came out, whatever, blah, 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 stored, whatever. I mean, I don't think the whole Wall Street bets thing was even out probably when you started trading it, right?
Yeah, dude, I had no clue. Like when I got into this, and if you guys look at some of the trades I post, the majority of my stuff, I'm shooting for like 90 to 95% probability of success, right? I'm not trying to get greedy. I'm not trying to do anything sexy. I'm just trying to do a bunch of smaller profitable trades that adds up to a decent amount. So this started conservative. I think it was like $40 away from the strike at the time, and it just got ugly like really quick. And the silver lining is, had I not gone out when I did, so I'm glad I did, even though it cost me about 54 grand. Had I not, it would have completely blown up the account. I mean, they would have margin called and liquidated the entire thing, 130 grand gone. And also, keep your long-term and your options accounts separate. That was another thing that I was really glad I had all my long-term stuff in a different account.
Yeah, I separate mine. I separate it for other reasons too, but not just that. But I do thank you for sharing that because this is a lesson here for everybody because you're trading those stocks like Kodaks, right? Like you just don't know, really anything. They can move quick too. So it's probably best to try to stick with well-known companies, right? And I came very close to selling to open a call on GameStop the very first day. I'm like, oh, it's not going to get up there. You literally go to the highest strike available. I'm like, it's not going to get up there. Just last night, it hit 500, or really close to 500, real early in the morning. It's like, oh my God. So I didn't do it. I'm talking about like the SPC and the stocks like that, right? Like, you're just playing with fire. You're going to get burned at some point. And just to make you feel a better, PD, I lost 30 grand years ago, probably equal to $54,000 now, but in 5 hours. So I mean, I feel your pain there. You will come back from it, definitely learn from it, right?
Oh yeah, dude, 100%. Definitely, like all the stuff that I've been doing that worked. I mean, that's the plan, right? Just do the stuff I know that works. Stay away from any of these, the meme stocks. Stick with the stuff that I'm familiar with. The ultra mega caps. Like not that it couldn't happen, but it's a lot less likely that Apple's going to go from 140 to 700 in a day.
Exactly.
Um,
That's likely to go from 140 to 200 in a week.
yeah, exactly. So kind of getting back to that stuff. And then the other thing that's just crazy, now I don't recommend anybody do this, but it just also shows you the power of options. So that trade went really bad, really quick. But the call that I bought, it's crazy to see that one, again, hindsight's 2020, like you said, that option I paid 50 grand for, it's now worth like 150 grand. But it doesn't matter because it's counterbalancing the one that's minus 160 grand.
Yeah, I mean, if I tried to get in on something, buy something, I was thinking, okay, I mean, why would I get in long on this freaking something? Why would I get in long on GameStop when it's gone up this much? So I end up selling open a put, and that didn't work, so I bought that back, and then I bought a put, and then it just kept going up, so I just closed that down, for like a small loss, $40 or something like that. But I can never be on the right side of things. I know some people are maybe killing. I think Thumper, didn't you make a lot of money off of GameStop?
Do I made a lot? You mean lost 2,800 buying puts? Yeah, made a lot.
I thought you made $4,000 off of it.
I dabble in naked.
Yeah. I mean, and then you're getting locked out by brokers too, and that's just like a whole other issue. Not even they'll let you sell it, but they're not going to let you get into it. So if you already owned it, then you might be okay, but if you're long, you might have gotten screwed.
Yeah, it's nuts, man. I don't know if this has been posted in the group or not yet, but I'm gonna post this screenshot just in the general for you guys to see. I just saw this, and it's just like, it's insane. It's these people literally now from all over the world in Wall Street bets, and they're literally saying if Americans can't buy it, well, we can in Canada, and globally we can, and don't stop buying it, just keep pushing it. And I'm like, holy crap,
Where are they all assembling now? I mean, if they're not on Discord, they're not on Wall Street Bets Reddit, where are they all, assembling or communicating?
Reddit, I think it's back up. Wall Street
Yeah, it
Bets
is
was
back.
down for a couple hours, but it's back now.
Yeah,
I thought
Reddit.
they got rid of that. They made the group, they shut the group down or whatever.
That was
No,
for an hour or two, right?
They went private too because they were getting called by Reddit admins to say that they're not able to control or moderate the content. And the Wall Street bad guys were like, your system can't handle our bots essentially, so it's not our fault. So I think they're back up yesterday.
Yeah, the screenshot I just posted in the group, I didn't realize, but that was from 10 hours ago. But yeah, at some point it went down, but it's back up. And man, at first I was the first guy to say, like, there's no way, it makes no sense this is gonna hit 100 or 150. And then the more that it just kept going, I'm like, shit, this really could hit $500. Like, it's insane.
Well, yeah, it makes sense because, I mean, you got a zillion people shorting the hell out of it. My question is how do they get enough capital to drive the stock up initially before the shorts had to cover, right? Like, retail investors don't have a lot of money usually. I mean, they require quite a bit of capital to push that stock higher to force the hand of the short, right? Which will just feel even higher because they're going to cover. But that's exactly what happened. It's just usually that doesn't happen. I mean, granted, it's in low growth stock, but in low market cap, but still, it still requires quite a bit of capital from the retail investors in order to cause it to force the hands of the shorts.
Yeah, I think it was a mixture of, there's stuff that we'll just never know until the documentary comes out, right? But some of it I think is you have Michael Burry from The Big Short, right? So he bought in 1.7 million shares when it was $10 a share, right? Then you have the whole Wall Street Bets group. At the time, there was 2 million. I think they gained like 1.6 million members in the last 3 days. So now you got 3.5 million members, let's say, and there's bound to be a couple either let's call them small whales or a couple people that are throwing a lot at it. But then there's a lot, like if you've been in Wall Street Bets, they call each other degenerates. Like there are people in there literally mortgaging their houses and throwing it into GameStop. So yeah, it's not that there's just a ton of these multimillionaires, although I'm sure some are. You have dudes throwing their life savings, mortgaging their houses, taking out loans, putting their kids' college stuff into it. The whole Wall Street Bets crew's behind it, and then they see, oh well, Michael Burry, from The Big Short, he made $150 million shorting the mortgage guys. So let's get on the train with him. And he was up, as of yesterday, he was up 270 million on it.
Wow, what a story. And it's not just GameStop people. It was Nokia, it was Express, there were some other ones too, right?
Yeah, BlackBerry, I think they're going after a couple of them now.
So it's like, all right, it's just like the SPACs, let's go out and buy some really low flow, shit stocks that are heavily shorted and just wait.
Yeah.
You still $500 there.
Part of me, and I was even telling my wife this, and I'm very lucky she didn't punch me in the throat. She was very understanding specifically because I didn't go into this as a gamble, it just went bad. But part of me wants to tip my hat, stick it to the man. But then the other part of me is like, yo, I'm the little guy with you, and you just stuck it to me. Like, what the?
Well, you know what's funny about that? Back in 2011, that was 2012, 2013 when I was trading FNMA, which was a penny stock back then. You got those, they're real well-known day traders, by the way, that make courses and crap. Can't remember the name of the people, but they were taking the other side of my trade. They're the ones that took my 30 grand, you know what I mean? So, and you know what? I just look at it and say, that was a lesson that I learned right there. I don't blame them, you know what I mean? It's like, it is what it is. And I heard Chamath, or whatever his freaking name was, talking yesterday to the judge, just battling the hell. And he was literally all for the retail investors, retail traders. You know what? The hedge funds, he's basically sticking it right to them. They're just killing the retail investors with all this secret crap they know, and the retail investors don't. So I completely agree with that.
He's doing actually right now. I think he's doing a live Twitch stream with AOC talking about it.
I was surprised that she was for it, which is kind of awesome.
Yeah, man, I won't go down my political rabbit hole. I
will.
She gives me the heebie-jeebies, but
I just laughed when I saw Ted Cruz retweet her thing and say I agree.
That's funny too.
That was funny.
I do her, but that's about it.
Who would have thought 2020, what would bring the shit world of politics together would be GameStop, right?
Yeah, this is so. And the thing is honestly, things like this only work once. They don't usually work again. So because everybody's gonna know exactly what to do next time, and it usually typically doesn't work. So I'm just gonna say that.
Yeah, that is a good point for anybody else, especially if anybody's newer in here. The guy that walked me through plugging the hole on these losses, he told me kind of like that thing. He was like, if you can get through this, he's like, it's gonna suck, but this is not a normal thing. He's like, this is a once every 20 or 30 years kind of anomaly. He's like, last time something like this happened, the housing market crashed, and before that, it was the .com bubble. He's like,
we had a flash crash too in 2010. I took advantage of that, but.
Nice. Yeah, but so if you can get through it, it'll be all right. Just go into it smarter next time, and the dude that helped me, he's doing okay, and he got, he lost a ton in March when the market crashed. He lost a ton when the housing market crashed, and he's still doing well. So it's just live to fight another day, I guess. But yeah, it sucks dick, man.
So how do you avoid a situation like that? Because you don't know what the next ticker that's gonna do this to you is.
So, from what that guy had explained to me after he got really beat up in March, what he started doing, and I'm probably gonna butcher this or mess it up. So if it kind of makes sense, Dave, hop in and make it make sense for me. But whenever he would go to sell a put or buy a call, he would then go and get one like two strikes above or below it as insurance. So he would be paying money, a little bit of money up front as insurance, and if the trade went his way, great. He just spent a little extra money, which essentially just made him make a little bit less. But if the trade went against him, that insurance would kick in and it would at least cap his losses.
Just talking about a spread, right?
Yeah.
Yeah. I mean, that's what it sounds like, I guess. I mean, prior to like the last 2 days, man, all I was doing was super simple cash secure puts, some naked puts, and
Yeah,
unfortunately,
there's a cap on your losses doing a spread, but there's a cap on the gains too. I mean, that's the reason I don't do it. Not to mention they're just, I mean, it's just double the work for me. But so the thing is, what I normally do instead of doing that, like he's probably talking about credit spread possibly, maybe a debt spread, I don't know. But you can get wider, right, without it. So that's just typically what all of us, well, at least Randy, Cloud, Dumper, all good myself have been doing. But yeah, typically the people that do the spread usually are the people with the smaller accounts. But I mean, there's some truth to what he's saying. It's just not the route I've been going. You stick with good stocks, you probably wouldn't have to even do that. But one of the points you made earlier, separating your long-term holds from put that in a different account is a smart thing to do. You don't want to get that stuff to be margined off and sold.
yeah, and just to reiterate that, this is an ongoing thing because I'm going to have to get with Interactive Brokers because I didn't get any notification. And had I got a notification, I would have put more money in, to cover it.
The problem with that though is that Interactive Brokers takes like 5 days for it to be active. So you transfer, it sits there. So that wouldn't even, they would have still probably margined and sold it off anyway.
And that may be the case, but I still want to at least try something because when it happened, I had a deposit in process. But regardless, pretend I didn't. That is a really good thing. So for any of you guys that are doing all this in one account, I mean, literally, had I not, I don't know, man, gone to the beach that day or gotten in an accident or whatever, lost my phone, literally in that one day, like yesterday, had I had even my whole portfolio together, it would all have been gone. Every single penny. They would have margined it, hundreds of thousands of dollars gone off of 6 naked calls.
Can you tell us or give us an idea of what type of buying power you're using? How much margin we're using? Give us typically we use the number here somewhere for me anyway. I got $170,000 in there. I'm using 76 of it. You know what I mean?
Yeah.
And maintenance margin, so 40% ish. That's where I try to keep it around 40 to 50% now.
Yeah, so I don't know that exact percentage just on the cash basis, but I can tell you on the margin part. So I have the 4-to-1 margin on Interactive Brokers, and then what I like to do, kind of as to be safe, is I like to keep at least 100,000 in buying power, so I can close back any positions as they're profitable, or if they go against me. So that was kind of my rule of thumb. That's what made me feel comfortable. When it got below that, I'd be like, okay, time to sell some stuff to get it back up or above. In this scenario, when it started going bad so quickly, I mean, I would literally see my buying power fluctuate by $20,000, $40,000 in the matter of seconds.
Are you using? I'm just curious. Are you using Reg T or are you using portfolio margin?
Reg T. Honestly, I don't know the difference between the two. The only reason I know it's Reg T is because I see it in my app.
Reg T is 1 to 4-to-1. Portfolio margin is 6-to-1.
Oh shit! I need to get portfolio then. Let's get crazy.
The drawback is your buying power fluctuates a lot faster.
Oh, that's very true. Yeah. Definitely. there is a learning aspect to it. Granted, this was an anomaly, so like it wasn't so much that I went in to at the time with a crazy stupid YOLO trade like a lot of these guys are doing and killing it. This was just like a perfect storm example of how you can get boned super quick. And also, here's the big lesson I took with this. Man, cut your losses quick. I could have got out of this and lost 10 grand the first day, and I didn't because I didn't.
Yeah, you know what though? You know what though? That's a tough one because if you knew what was going to happen, yeah, sure, let's cut my losses, right? I'll take $10,000 loss, but you don't know what it's going to do. You didn't know it was going to do that. None of us knew, right? That's a problem. Like, you know, I can tell you this because I used to day trade a lot. Anytime I cut my loss, I always regretted it because it would just turn around and go the other way. So that's a tough thing right there to say and to manage.
Yeah, that's true. I guess one of the things that I guess maybe if the trade's going against you, have at least in your head a number like that you're gonna stop at. Like when this started going against me, I didn't have like I gotta stop it at this point. It just kept getting bad, and then it was okay, and then bad, and then okay, and then that little roller coaster. That's when I was like, luckily. I reached out to this guy, and it was around like 130, 120, 130 bucks a share when I bought that call. Yeah. And it might have been a little higher, but that same day, like literally within the next 2 hours, it shot up to like 275 or 300 bucks. That would have literally, I would have lost the entire account. It would have blown up. And so it's crazy to think that in a 2 hour time frame, that whole thing would have been poof, gone.
I think the lesson here is instead of maybe cutting your losses early, don't get into a stock where don't get into shit stocks, right? Get into the big freaking quality freaking names. Don't chase that premium. You know?
Yeah, another thing I'm hearing is I think it was a sizing issue. You should not have been in 6 contracts at all. That will kill you. You have to be really attentive to what kind of number of contracts you're putting on any company. So remember I was saying I lost like 20,000 on Roku? That was because that's because I had 6 contracts on, and it was just like BD said, it was like a 95% chance of profit trade. But that thing has gone up for 2 months straight, and after some time I was just like, okay, I'm done with it. I just couldn't deal with it anymore. But the thing is, I had 6 contracts. Had I had one, it would have been a lot more minimal. But you need to understand your portfolio size relative to your contracts. And it's not like, oh, I have 200 grand, so I'm just gonna do 3 contracts because I was doing one at 100 grand. It's not like that. You have to be really careful with it.
I would play the contracts more to what type of stock it is. You know, what's the quality of the stock, right? Because Roku it's not a GameStop, right? I mean, it's a quality stock, but it's a memes type of stock, so you definitely have to position accordingly.
Yeah, I think it's smart to go in kind of knowing a mixture of both. You know, like with Tesla, right? Tesla is super volatile, but I feel way more comfortable with Tesla than I ever would with GameStop at this point. And if some of you guys, and I think most of y'all were here when this started, I remember when I first posted, I was like, I don't even want to touch Tesla because it was so volatile. And now, if I'll trade it every day just because I'm a lot more used to what it does. And with something like that, I mean, dude, I'm going like $300-400 out on strike prices. You know, when Tesla is $850, I'm selling a strike at fucking 500. You know?
Yeah, I do the same thing. Like, yeah, I'll buy it down there, no problem.
Yeah, we all do the same thing with that.
Fucking GameStop, man.
So, for example, SPX, that's something I started trying this week. And one of the things that I was seeing is people who are trading the 0DTE on SPX, and they're doing a spread on it. And I've noticed that they typically try to do a credit spread, but they up the size of their contracts. So they try to minimize their potential risk, but do they try to maximize the gain by doing more contracts? Is that more risky, in your opinion?
extra contracts are always risky, regardless of being defined or undefined risk.
The spreads is different, because you're just limited to the loss of the gap between or width of the spread, right? So, right, but you multiply that by the number of contracts. I guess that's where the problem comes in.
Well, I mean, it depends on how big your account is, right? Like 2 contracts with a small account's big, but if you had millions of dollars in there, 2 contracts is shit, right? It's nothing. So it just depends on your account size.
Yeah. I mean,
Actually, about SPX, as because it is one of those. Well, it's an index, like for one, right? So is it a relatively safe?
I don't know. Last time I traded SPX, I did spread on it, by the way. It was a credit spread, and it was like a 3-day DTE, like because they traded on Monday too, like expired on Monday, and I was sweating over the whole damn weekend because the loss versus the gain, like the gain was like exponentially different between the gain versus the loss. Like it just wasn't worth it. I'm like, all right, this is just not going to be something I'm going back to probably.
I see. Yeah, I was ripping my hair out a little bit. Well, this is my second week of doing, options trading, but I'm doing credit spreads on it, and both of the trades actually ended up being green for me. So,
I would say go with SPY over the SPX.
SPX is what, 10 SPY contracts, right? Rolled into one, basically?
Yeah, definitely start with the SPY because
I don't know.
it's easier to manage.
So the reason why people trade SPX, especially like big firms, is because they save money on contracts, right? Because they can just trade like 5 SPX as opposed to 50 contracts on SPY. But if you're just starting out, I would highly recommend SPY as opposed to SPX.
Yeah, if you look at like
and
the
that's
max
just
loss.
because
Yeah,
it's
sorry,
cheaper.
go ahead.
And that's just because it's cheaper.
Right, because it's like 10 SPY contracts.
Built-in leverage.
You're just doing one contract, right? They save money on commissions, is what I'm saying.
Right. Well, I mean, there's other advantages of SPX over SPY as well. So the taxing is actually different. Also, the settlement is different, and you can't get assigned. It's all
Yeah,
cash
it's
handled.
kind of settled. That's true, but I don't know.
So the risk is higher because of the size, basically, is what you're saying.
Well, what is your how much margin are you using to put these contracts on? I mean, even if it's defined risk.
Well, I'm using a margin account, but I'm doing credit spreads that are 5 wide.
Oh, okay. So $5 wide spreads or five?
Yeah. A $5 wide spread.
$5 wide spread. Okay. I mean, but it is what it is.
What's the max loss though? The max loss is pretty high, right?
No, 500.
No, well, I have to go back and look at my history. It was like $5,000 or something when I did it. Maybe I had too many contracts on.
Well, I mean, the max loss is limited. It's capped at width of the strike.
Right. I'm just saying, I don't know how many contracts I had on. I just know that the gain was just worth the max loss that it could have been. It was like $300 versus, a $5,000 loss. You know what I mean?
Right. Yeah, I mean, in my case, what I am doing is I wait until at the earliest 11 a.m. because that's when FPX typically comes down, and if it goes up or down, it will normally will kind of settle back to that same point in time. From a pricing perspective, Wednesday was an anomaly. It went down by like 100 points, but basically, it was a $500 max loss risk for me, and I ended up making $60 on it. So.
Yeah, normally people would tell you those are terrible odds, right? $60, $500 risk for $60. You know what I mean? Like it's normally like you're looking for like a 3 to 1, typically. But I mean, I don't know. I would start with SPY honestly, but it's just easier to manage and.
Okay, good to know. And then for this week, well, actually, I guess for tickers like Amazon, they still have some announcements that are coming out next week, right? It's on February 2nd, I think. So they'll I'm assuming don't touch those yet until they come out.
I wait till earnings comes out.
Yeah, I would avoid earnings in anything. Thumper actually got screwed with Beyond Meat on earnings. That shit dropped 30%. And he was way out of the money.
Was that when you took that big loss on Beyond Meat Thumper? I didn't realize that was from earnings.
Yep, it was an earnings. Stock went from, I think it was like 140 to, well, it dipped to like 105. And I had like the 125 puts on.
So it was funny because like I actually had contracts on with him, but during the day they had some news that McDonald's was going to be partnering with him. So they like came back and I pinged him. I was like, dude, you need to get out right now. And then he's like, oh shit, I was at work. I couldn't make it. And then literally like an hour later, that thing tanked 30%, or maybe the next morning. We were just like, what the fuck? So.
Yeah, at one point it was showing like 20k losses when it was down to like 105. Like, gotcha. It was ridiculous. It went up a little bit before I tried rolling it, but ultimately I just locked in the loss and spread out my risk on other tickers, kind of thing.
Earnings next week on Amazon, so after earnings, I think it's early next week. Let me see.
Yeah, the second.
Yeah, Tuesday. I'll probably put on contracts after earnings. Hopefully the stock tanks or something like that. That would just, you can get all the way down in like, the mid 2000s or something like that.
How long do you typically wait before you start putting trades on after earnings?
Depends on what it does. The typical rule, this is a rule that I learned years ago. You wait 3 to 5 days if it tanks. That's typically where you wait, but it just depends. I don't know.
One of the things that I like, minus, take it with a grain of salt because I just lost a fortune, but the benefit is the majority of that money that I lost were gains that I had made just doing cash secured puts over the last 2.5 months since we started posting the trackers. So that's one of the biggest things that's kept me from, going super crazy is most of it was gains. But with that, like on Apple or Amazon, like any of these big guys, they're not going anywhere. So when they would have a huge red day or earnings come out, and 2020 is the weirdest world, and we're just in 2020 part 2 right now. You have great earnings and it drops $100-$200 on Amazon. Go and sell a put $400 or $500 below that, and you're still getting fat premiums.
Exactly. I know Amazon scares people because it's big stock, but you can get so wide on that thing and still make a pretty good money. Now, granted, Thumper will probably say, you're making $100 for like a 0.0002% return annually, and it's like $100.
Yeah, and on some of those, granted, there's no for sure anything, but some of those big ones, it's like all but guaranteed that $100 you're keeping. You know what I mean? Amazon is not going to $1,500 next week. And if it does, with stuff like that, if that were to happen, we have way bigger problems.
Yeah, I agree. And that's part of the reason why cash management is important. You gotta keep your account sized correctly, not get in over your head, go real high in your buying power.
Yeah, guys,
Explain a little bit more in terms of why you're choosing to not do credit or debit spreads, and how do you actually end up making money? Because like, for example, if I'm looking even at next week for Amazon, if I was to get into it, do you just go out to, let's say, 2,900 for a put and sell that for 6,800 or wait, 685? That's like a $700
different for everybody. I look at a chart. I always look at a chart, and I'm going to go way below the 200 period moving average. So I'm going to want to be like around 2,500 to 2,800, somewhere around there. And probably a couple $100, but it's most likely never going to hit that, because I'll do like maybe at the most maybe 10 days DTE on it. As far as answering your question about the credit spreads, I think that's a personal decision. If you have a smaller account, that's typically what people do, is they do credit spreads. But to me, number one, it's like almost a guaranteed loss if something goes wrong, versus I can just roll one out. I mean, granted, you can still roll your credit spread too, but it's like almost a guaranteed loss right there if you don't roll it. And I can roll just one contracts and still get way wider than what you'd have to do on your credit spread. So that's the reason I think it's safer to just be in one leg versus being in a credit spread.
Yeah, I don't do. Honestly, I probably don't know half the stuff that you've been learning about. And forgive me, I don't remember. But Invest to Retire. I know you told me your name, but I forgot.
I actually didn't.
Oh shit! And now I don't feel bad. Invest to Retire. I don't want to deal with it honestly. Like I don't want to have to manage it. I would rather put in a quote unquote safe $200, $300, $400, $500 in my pocket, to where like minus the GameStop anomaly, when I get busy at work, I'm not having to worry that it's going to go against me like that. Because on a lot of these, the Teslas, the Amazons, the Apples, I go so far under that, like, when I say something really bad would have to happen, knock on wood, I wouldn't want this to, but it'd have to be like another 9/11 or something crazy like that, because I just don't want to have to be constantly worried about it. And I don't chart stuff out like Dave, although I probably should. That'd be a lot smarter. I do all my trading on mobile. So what I do is I'll look and I'll see what was the very lowest this was at in the last 3 months, and then I go under that.
Close enough to what Dave does. You don't need to look at charts specifically, but yeah.
It helps. It only takes 5 seconds.
So another thing I recommend is you should always try to trade large market cap stocks. Tesla's an anomaly because of the way it moves, given how big of a size it is. But you gotta think about it, like the money's gotta come from somewhere, right? So it's a lot harder to move a $500 billion stock than a $5 billion stock.
Just to give you an example, the last Amazon one I put on was January 6th. I held it for 7 days. It was a 2,400, all right, put, and it was $1.45. So $145. It was a 1.5 or 1.6% probably in the money. So I'm making $145 there, and the thing needs to make almost 1,000-point move to, you know what I mean, like in 7 days.
Hey boys, I gotta jump off, but I'll holler at y'all later.
Alright. Thanks for the memory betting.
Sorry.
Okay.
Well, don't be shy, everyone. Just hop in somewhere.
I think that's just a mean, for people here in smaller accounts, that may not be an option. Just to do a naked put or naked call may not be an option. But if you can get to that point, I mean, there's still good stocks that are relatively lower price too. Then it's just so much easier to manage just a single trade on the top or the bottom, and you can be so much wider than where your credit spread, or in this case you were talking about a debit spread, but you can be a lot safer with it, right?
Yeah, so that's what I'm looking at. The premiums on Amazon, that's the benefit I'm finding with doing at least credit spreads on my size of an account, is I can get closer to the in the money, do a max loss strategy, get a little bit of money to start building up the account, but I can't afford to do for example, negative put on something like Amazon to get that premium. So,
Well, I mean, I would.
right.
Yeah, what you can do though is like,
Like there's an issue with the count of 6, everybody who did 6, actually got burned, whether it's credits or the naked ones.
The thing that
You're an informed person.
so I guess the thing that I'm learning from you guys is that it's safer to actually get higher premiums on a, well, if you can find a ticker that has higher premiums with a single option contract or even a credit spread, if you can find one worthwhile enough, rather than getting more contracts at a higher, I guess, farther out of the money, because that can go against you quicker. Because basically it multiplies your losses if it goes against you.
I look at it differently. It depends on how high price the stock is. If it's like a $1,000 stock, I'll just do one. If it's like a $100 stock, I might put on two or something like that, or three. It just depends how much the premium is too. I think that's like a case by case basis. I don't know about you, but it almost sounded like you were trying to directional trade too, versus actually take advantage of the time decay, the theta decay. Was that what I was hearing? Like, I mean, literally, like you thinking Amazon's going to go up right here, so you're going to put at the money put on or something. Is that what I heard?
So I've actually started off with just doing iron condors, which tries to kind of minimize directional losses, if you will. But after getting terrible fill rates, I've actually started this week. I've been doing either a put spread or a call spread, depending on if the stock actually went up or down in that time frame. And then if it went the other way around, I would turn around and get to the other side. This way, it basically widens the range.
How much in the money are they though when you're selling them?
Oh, they're like 90% out of the money.
Okay, yeah, I wouldn't necessarily call it. Yeah, it's definitely not a directional trade then. Not that I just misunderstood what you said.
Yeah, no, I'm not ready for betting the market like that just yet.
Yeah, we do the same thing. If it's an update, tend to sell calls. If it's down, you sell puts.
Theoretically, that's what we try to do.
Yeah, but I mean, like, it's not gonna be perfect every day, right? You gotta take what the market gives you.
It's interesting. So, if you were to recommend, and I'm not saying, I'm looking for, pick this stock, but based on your experience so far on some of these tickers, like, is an app, something like Apple or Microsoft a good ticker to go after for doing these, non-spread type of options?
QQQ, Apple, Microsoft.
Nexus, yeah, that's probably easier.
Yeah, I mean, Amazon, those are my top plays this month so far.
Okay.
I mean, they might not be juicy premium to some people, but they're solid stocks. There's less risk there, so I mean, it all adds up in the end. You know, just don't get greedy, I guess.
Well, let's put it this way: if I get $20 or $30 right now as I'm learning, I consider it a win.
I see no problem in one of those stocks.
To be honest, again, this is my just second week of real money trading with my real money. So anything that goes in the green, I giggle like a little girl.
I just put on an Apple today because the earnings was already out, so it's a 30-day DTE on it. $50. I sold 2 of them, and it's a 112 strike. I think Cloud put one on as well.
You went 112? What the hell? You always go back. How long was it?
No, 112. Once
Yeah.
you do 115? Oh yeah.
But I did 2 weeks out.
You know me, man. I gotta be way down there. 110 is where I wanted to be. I just had to come up to 112.
Yeah, there was nothing at 110. I was looking to. I don't want to do a month though. I don't know.
Yeah, I didn't either. I
A
was
lot
trying
of
to pull
DPA
up
was me over.
I had a Microsoft on too. I think you and I both put the Microsofts on, just yesterday or something like that.
Yeah, I closed it out.
Yeah, I closed it out too today. $78, 1 day old.
Yeah, that was a gift. There was no way Microsoft was going to keep tanking after posting earnings like that. Yesterday, it just got dragged down. I was like, this is like free money.
It's just taking advantage of things when they're down, you know. I mean, when Amazon posts that they have like a 5% decline, take advantage of it, right?
Yep.
It's easier to take advantage of it. I've always made out better just trading the stock after the earnings, even though I've done pretty well, you know, trading after hours during the earnings, but it's just with the options, it's just, all right, just take 10%, and let me get way down below that, take advantage of that. This stock will probably end up coming back up soon.
Well, it looks like I have some new strategies to play around with. I appreciate the input.
A lot of us been doing a lot of poor man covered calls this week. I've closed quite a few of those out for profit already, which is surprising, but I also have a couple that are disconnected right now, which is kind of odd, where the long call is way down and the short call is, you know, it's like flat or it's red or something. So both sides are red. It's kind of odd.
Where did you close out?
I closed out AT&T. I closed out the Johnson & Johnson, the Canby, which I reopened.
I should have closed out AT&T. That was stupid. I could have just sold another one like the next day.
What's the
AT&T was
frequency
awful.
on the? Sorry, what's the frequency on the? Is it the like you go 1 week for the PMCC?
For the short ride?
Yeah, like for DT, like is it weekly?
Well, I mean, the long call, we've been doing 2-year leaps, but
No, the short one.
yeah, the short one, some of us been doing weeks, some of us been doing 2 or 3 weeks. It just depends.
Yeah, it really doesn't really matter, to be honest. Cause like, if it breaches your short strike, I mean, you're making money. The longer it is, it's just more data involved, so you have to wait longer. But
Yeah, I also caught up with AMC actually. You know,
yeah,
not knowing that it's what it's gonna do, but I started with the leaps and then I just converted it over to sold 2 calls on it for the strike 7. You know, all day long it just struggled to actually get up to 5. So I put on the 7th strike, you know, and the next day, that was the day that it just shot up after hours, you know, and next day that I looked into pre-market was like 25, you know, so I was just chasing this thing, trying to close because I got quite a bit of fees involved, you know, with the quest trade here, so
So you
a
did
lot of hassle.
You did a PMCC on it, on him.
PNC.
Yeah,
That's
yeah.
odd.
I came out good, but because of the leaps, they were gaining value. I just went deeper, like 2 strike on the leaps. So just had to close them all out, because I was just a little bit of concerned about the assignment piece, if that would have happened. The other thing that I really struggled with the day, this all happened, I could not get my platform to work properly. So I could log in, but I could not display anything. It would just spinning wheel all day long, and the support is just really horrible. So you can't get anybody on the phone. If you get on the chat, it's like 2 hours of wait time. So it's just kind of frustrating to kind of chase these. End of the day, it just tried to. I got like the last 15 minutes for the platform to come back up and tried to exit out of the trade. So it came out profitable because I just got rid of all of the leaps and the short calls as well altogether, So
Just curious, why did you do a PMCC on AMC?
it was a small stock, I went with leaps because there was news that came out for the funding, so I knew that the bankruptcy piece probably diminished there, and I didn't know, this was all discussed into the boards, the WSB, and then all of that hype that it just got caught up in the midst of it. So, yeah, it could have worked well, because the premiums were good, and due to the volatility spike, so I thought it would be good to carry over. But yeah, I was really close to earn $100 on those 2 calls. That was really interesting. I was about to close, but then I said, well, it's struggling to go past 5. Maybe I'd be okay with 7 and just go expire worthless. And should have done that, I would have closed those and probably made like $2,000 on the leaps alone. So it was just a good learning experience. But something that happened like the very first time that the platform just misbehaved, all day long, I could not get in. It's kind of get frustrating. So for example, Petey was just discussing that he could just put on those trades, like he was just incurring like a huge loss. But if he wasn't able to get somebody on or be able to place those trades, this thing just moves so quick that your 50K loss could just turn into 100K in no time. So it's kind of frustrating. And brokers normally don't hold themselves responsible. So like they just, we apologize, working on the issue, and well, that's the only thing that you get from them. So it's just a note to self that just be mindful of all those things that could happen, on a day like that.
I don't think Robinhood is the place to be doing this personally, but it's just, I've heard a lot of, even Randy's tried it because it was free. Freaking going, nothing's free, right? So it's just the fills are terrible. You're gonna be waiting around for a while, but pretty much every broker out there has an app. Now some are better than the others, but like Schwab is not the place to be probably doing what we're doing either. TD Ameritrade probably is okay, but Interactive Brokers for sure.
Yeah, well, we have very limited options here in Canada, so I'm just using Questrade because they offer leverage, into the other portfolio, so you don't have to come up with a large capital. Versus Interactive Broker probably needs, it still has that ratio, but you have to put down at least something in there to be able to do cash secured puts, and things like such. So I may move, but I'm just trying to build the account slowly. Once I get there, then I might go because the commissions is a big deal. It eats up a lot of my. So I pay like $100 just to get their package. That gives me a flat fee of $5.70, and then $5.70 a contract. So every trade that I do is like 5 years ago. Exactly. You do 2 of those, it goes past like 6.
Yeah, that's one reason not to do spread with Questrade.
Yeah, I'm not doing spreads. It's gonna eat up all the profit that you could have.
Or iron condors.
Yeah, exactly.
It's like 4 legs to deal with, so.
Interesting. So I'm just scrolling through some of these indexes that you guys were mentioning, like RKK, to see,
Stick with QQQ, SPY for now. RK and RG are a little bit more riskier, quite a bit more riskier.
Uh-huh.
I mean, don't necessarily chase the premium. Talk about. Jerry can talk about RK and RG. I'm in both of those right now. Like they're just, like yesterday. They're under pressure big time. So just stick with the better ETFs for now.
For something like QQQ, how far out do you go looking for support and resistance levels?
Well, the QQQ, I don't go out as far. I'll still look at a chart, try to find out where support is. I won't try to get down to the 200 period average or something like that, just because it's such it doesn't usually move that much. So, like I have a QQQ on right now. Ideally, at 300 would where I would want to be. So looking at the QQQ that I have on right now, it's at 295, and it was a 15 day, so it was 2 weeks. 15-day DTE, 295, $78 per contract. I have 2. So just look at a chart, right? And around that 300 is a sticking point. So most likely it would stick there. So I just got slightly below that for 2 weeks.
Dave, do you look at the year-long chart, like a daily one?
Yeah, I'm looking at the daily candle chart.
Okay.
Yeah, it's interesting because, just even looking, so it looks like the probability out of the money for the 300 is 77. Am I trying to be too safe when I'm going out to like 88 to 90?
What's the DTE on it?
Just 15 days.
Yeah, so mine, and I go a little bit higher on like QQQ or SPY. Mine was 8%, probably being in the money. So that's what, 90, 92 for you?
Yeah.
So 77, that's like more of a Randy thing.
Yeah, so you stick around somewhere around the 90s, 92s.
I like to be between 5 and 10, depending on what it is. Like QQQ, I feel like is safer than in individual stocks, so I'll come up closer to 10 maybe.
Dave, what are you looking for the premiums, at that probability?
I got 78 cents. I got 2 of them, so, $140, $150.
Yeah, that makes sense. Anything below 50 cents, it just gets eaten up by the commission. So I have to keep that in mind,
Yeah, that's one nice thing I don't have to worry about anymore. At 7:30, I gotta get to the store, guys. I'm about an hour to my limit, so if you have any questions, you can hit me up directly or ask any one of these people here. So I thank you for joining, and you guys can hang around if you want.
Thanks for the help, Dave.
Thank you.
Bye, Dave.
Bye, Dave.
I'll get some, don't worry. All right, thanks, Randy.
How did you do this week? I haven't seen you post much.
Who you talking to? Me?
Yeah.
Yeah, hang on, let me look. Well, the month is I'm at like 33 for the month, and this last week I'm up about 2 for the week.
Okay. Did you take any losses on Wednesday?
Yeah, I gave a little bit up to GME.
Gotcha.
I sold the 200 when it was about at 80, and it shot up to 140, and then I bailed on it real quick, so I lost about $2,000 there.
I see.
And then I went and bought a 120 put on it for 3 weeks, and so it's, that one's still, I don't know whether it's going to do it. It's showing breaking even right now. So, but if GME starts coming down, that should actually be profitable.
I wanted to ask Dave that question as well as you, but based on the experience that you guys had, over the last few years, what happened this week? Are you guys finding that this is an anomaly? That this kind of volatility in the market doesn't typically happen?
Well, that's not volatility.
Or is this normal?
That's insanity. Yeah, I mean it's like that's a once in a lifetime thing. We're not going to see that again. I don't expect. I think that we're going to continue to be volatile, but we need volatility to make money in what we're doing. So.
Right. Yeah. I mean, what I was curious about is, if this is again second week of trying to do options for me, and this second week was kind of an insane week. Just looking around, and luckily I was able to stay green because I was choosing, strike prices that were almost $100 out of the money, or not out of the money, but away from the strike price, or from the current price of the actual stock. So I'm curious on things like, SPX that I was trading and Amazon. If this continues, then it would be a very challenging way to learn how to trade. But if this is not a usual type of week, then I can take a breather, I guess. But I felt like I was losing hair by the second.
Well, too, it helps if you just look at the chart a little bit, because if you look at GameStop, the chart goes, it's flat at $4 for, I don't know, a couple of years. And then it hits like $24 in one day and then $80 the next day. It's just going parabolic. That's what stuff you got to stay away from.
Right.
So, don't let that be the norm. Or think that's the norm. It's just not.
Yeah, I guess I haven't really looked enough at the charts I do like Amazon quite a bit based on the premiums that it's gaining me. But I'm just wondering if it's a safe enough one to continue trading, or start actually looking more towards something like QQQ, as Dave was recommending.
Your Qs or any of your indexes are going to be more averaged out, but your premiums are also going to be averaged out. I like Amazon. I trade it all the time. I trade Tesla all the time. Just because those stocks, you're not going to have a group of people come in and manipulate those stocks. You're just not going to have, because GameStop went up like 1,700% in a week.
Right.
With Amazon, you might go up 10% a week on a huge week, and Tesla maybe 20% in a week in a huge week. But GameStop went up 1,700%. That's just outrageous.
I think when a stock shoots up like that, very quick, it kind of makes it a prime candidate for the call side of things, usually, but this was an unusual scenario where it just kept creeping up, every day, right? And I think betting on the downside of it, like it's gonna come down, those never worked either, because in this case it's just straight 3-4 days, it just kept going up and by a large amount, right? So that was a very unusual factor in this. Maybe there is a point, where you just gauge this and see if it's just moving up too quick, too fast, multiple days in a row, be staying away from it. And
Yeah, I mean it's hard to say because right now it's got worldwide attention. So now we got people from Japan and Russia and Sweden, and everybody now is buying this stock. They've never heard of this stock, but they want a piece of it because they think it's going to make money. Because it got down to like under 200 today, but right now it's back up like to 360 or something like that. It's going back up again, and there's no reason for it to. It's the fundamentals of the company. It's a brick and mortar building, and everything's going online, and given time, it's going to come back down to probably bankrupt levels is where it was at before all this started. But it could hurt you along the way until it does that.
Yeah, like Randy said, essentially, you kind of also have to look at your options, just like if you were buying stock. I mean, we're selling options. Why would we sell an option on a garbage company like GameStop? I mean, seriously, it's the same kind of principle as if you were buying long the stock. Would you buy long the stock of GameStop? You probably wouldn't before. Why would you put your faith into a company like that now, especially with big money at stake? I wouldn't do it. I wouldn't touch it. The couple of the other companies that did this was Nokia and AMC on a little bit smaller scale, but at least those companies, Nokia makes money. Nokia is a huge company, and AMC probably has a better chance of survival than GameStop does. So that was just huge manipulation in GameStop, and like Randy said, with no justification of it whatsoever. So I wouldn't even step foot into that in that foray, because you can get hurt in a bad way, like we've seen.
Yeah, you got
Right. Well, I mean,
you got several millionaires in a pissing contest, and you don't want to be between them.
Yeah, you get pissed.
that's a very good point, and I think JW also mentioned a very good point, because that will keep you away from companies like that, which could just catch hype, in no time. Which you would regret, if you were to put the shares in case, you would just regret having to hold that company, because at the rate that it's just flying high, it could just be any moment be tanking at that rate too. So it's lost altogether then.
So for me, I actually bought 100 shares of AMC at like 185 or something before it really took off. And I didn't really pay any attention to it. I mean, I knew the AMC as a company, and I saw some of the news that were coming on about it. And I was thinking, okay, in the next 2-3 months, as the vaccine is going to come out, all the kids are going to want to go back to theaters and whatnot. So, okay, it's $180 that, if I lose, whatever, it doesn't matter. So, and then it was kind of interesting because after hours, I started noticing it just going parabolic, and so I scaled out by 50 shares. So I sold it like 650 or something close to that. And then, I'm thinking to myself, well, whatever happens. Everything is just, gravy after I locked in some profit. So I literally set 2 more sell orders. One at $12 and the other one at $15. And an hour after I wake up, I look at my phone, and both of them got triggered. So I'm like, okay, well, I just made a little bit of money, but there's no way I was gonna go options on that. So
Yeah, I actually did options on both AMC and Nokia, but I didn't do anything crazy. I did a few put options, sold the open and puts at really low. And this was before they kind of took off. At I think Nokia I did at $4, and AMC I got at 3. So I didn't have a problem owning those shares down at that price point. So I didn't mind selling those puts. Now, the time people were doing GameStop, right? When it was at 300 and selling $200 puts. I think Randy might have been there, and that's it looked good. It did look good on paper, man. When you look at that thing, it looks great. But oh man, that thing just took off and just never looked back.
Yeah, I had a $200 call on it there for about an hour, and then it scared me out. So I took a small loss, but I'm glad I did because it would have been horrendous had I let it go to the next day.
Yeah, I was looking at calls. We were looking at previous before when it first made its first run up. And I was looking at calls just now at where they were, and it was like, holy cow! I was looking at a $2 call before it made its run up. I mean, a $60 strike call that was worth $2, and now it's worth like thousands.
Yeah.
So you could have lost, it's ridiculous how much money you could have lost.
Yeah. The interesting thing is,
do you guys trade Google at all?
What's that?
Do you guys trade Google at all?
I never have.
Okay. So that's another one, and they actually have 2 tickers, which I found interesting. Just GOOG and GOGL.
Yeah, I haven't followed them.
In class C shares.
I think those are AMD shares, like how Berkshire and Warren. You have to look at them. I don't know if options are available on both.
Yeah, they are. The ones, the Google ones, the GOOGL, have higher premium. So one has the ability, basically, I guess you have a voting power, the other one doesn't. So that's the biggest difference between them. But the premiums on the GOOGL are a bit higher. So, but actually the volume. Volume is not horrible. Actually, that's another question that I had. Do you guys look at the volume, and is there a threshold that you would not go into a ticker if if the option volume is below a certain number?
I don't pay any attention to it.
Don't worry about the volatility of a stock.
Well,
specifically the option aspect.
Yeah, but then again, I'm usually the stocks that I'm in, they're high volume anyway, like Apples and RKs, and so I'm not playing the low volatility stocks.
Gotcha. Okay. So it sounds like once you find your set of tickers that you like to do trades on, you kind of stick with them.
Yeah, you just keep doing them over and over. I do the same ones. It makes it easier. You don't have to research them all over again, and then you'll start learning your stock, and because it'll follow patterns, and then it makes it easier to predict.
That's one thing that I think I'm still struggling with is the fact that I'm trying to research different things, different tickers. I think I'm getting a little bit more comfortable. I can say that after doing it only for a second week. But yeah, I feel like I'm getting a little bit more comfortable with Amazon and SPX. But I guess I need to do it a little bit more, and then I'll find out the ones that I like.
Yeah, just start off with stuff that you feel safe with. When I started, I was doing AT&T and Coke, and it took me 18 months before I started doing something like Amazon, just because the size scared me. But now that I'm doing it, it actually seems safer than the smaller ones.
Right. Well, that's why I like the credit spreads, and once I kind of learned how to deal with them. Besides the fact that it's a little bit harder to get the fills, but actually that's another thing I'm beginning to notice is the fact that the fills are a little bit slower for me on IB for them. It tends to force me to kind of wait and be more patient, and that's another big thing I'm beginning to learn is you have to really learn how to be patient with things. Don't chase the price. As soon as you start chasing it, you can get screwed.
Yeah. And I was going to say earlier when you were talking to Dave, but I didn't have a chance to really break in. One thing you can start doing too to work yourself towards doing cash secured puts and move away from credit spreads is just start going wider and wider on your credit spread, because that'll get you more premium, and if you work it right, you can get that bottom one to where it's almost free, and you're almost mimicking a cash secured put that way, so that if you do have to roll it, you just ignore your protection, let it go away because you have practically nothing into it, and then you can just roll out the one. I don't know how to explain it, but you just, like I say, you just drop off the protection and don't worry about it because you got pennies into it. And then when you set up the new one, you'll just set up like you normally do. And it just makes it a little bit easier. But the whole idea is to get that bigger premium.
How would that work? So, for example, let's say I don't want to go above a 20 wide strike. So I'll get that strike, and then let's say the short side gets in the money. You're saying to roll that, forget the long side, let it go.
Yeah.
And then just roll the short.
You're gonna set it all up again. So when you roll it, you're actually gonna have two long sides. The one's gonna be in a position that don't help you, and you'll have a new long side and a new short side.
I think so. That's as long as I'm not using that strategy builder and I'm doing the separate lugs.
Yeah, probably you don't want to do that separate.
Yeah. Okay.
But I see so many people, they do like a one strike wide, and if you got $1 strike in there, you're limiting it to $1, and that's where people put on 20 or 30 contracts. But you could do the same thing and put on 20 wide strike and only do one contract. Then your commissions are better, and it's easier to roll.
Right. Yeah, what I've been doing is I've been doing 5 wide strike. Well, that's because Amazon and SPX, that's what they give you, essentially. So at least I'm getting a little bit, but, still too small.
Like I say, though, just depending on the size of your account, just take your width as wide as you can take it. And what you can do is you can back that protection side up to where it costs you almost nothing, and you're mimicking a cash secured put that way. Just play around with it and see the numbers, but it'll get your premium up, and when the premium comes up, you can start building your account faster.
Right. Yeah, that's the other pain point that I have is I keep wanting to actually get in. But one thing I found really good with TDA, at least based on my experience, is whether it's a paper account or it's a live trading account, the numbers that they show for the mark or the price itself that you get, as soon as it hits it, you basically you get a fill. In IB, it's a nightmare for me because I'm watching. I don't know what to set, because if I set the mid, it never fills. Almost never fills. So
is it when you use the strategy builder?
yeah, right now I'm using Strategy Builder.
Yeah, I've noticed that the same way with Strategy Builder. If I use Strategy Builder, then the fills take a while. I mean, because especially on a multi-leg trade, because it's got to look for that mid, on multiple legs, and come out with the right, output, I guess is what I'm trying to say. So yeah, even I don't put on multi-legs. I do strangles, but I never use it. I never use the Strategy Builder. I'll sell one leg and then I'll sell the other side separately. That way, you can control your ask price.
Right. I guess maybe what I should do is, instead of actually playing with something like SPX or Amazon and do the credit spread on that with Strategy Builder, maybe I should try something like QQQ, since it's 10 times lower the size, and then see if I can do the actual different contracts, build it out as you guys are saying. So my account size is 5K right now, essentially. So I can't really afford to, pop $10,000 worth to get one side.
Oh yeah, and with the 5K, yeah, you'll have to take your time to do some, correct moves. You can't really take any.
You may find though that if you pick a smaller stock, if you can actually do it in a cash secured put, then without having to buy protection on it, you might end up making more money on a smaller stock. I haven't looked.
Yeah.
So
So what kind of a smaller stock would you then take a look at for this kind of?
Geez, I don't know what you can do with a 5K account. I know you could probably do the Coke or AT&T or maybe Verizon. They're not going to be super high paid, but I would just go do the numbers and see how they compare with a cash secured put, because you may be getting like 15, 16 cents a contract versus 6 or 7 cents on a spread.
Well, on the spreads, I'm, like on SPX, like I said, I'm getting somewhere around 30 to 50 cents on the spread itself, just on one side.
Yeah, I don't know. I'd have to do the numbers. I haven't done those in so long.
Okay.
I wanted to ask you, when you do your spread, I believe they're credit spreads, right? On the put side. So you're trying to get probably closer to in the money, to get more premium because your width is only $5, right?
Only going out to like close to 90% out of the money.
Okay, that's good. And so one of the things that I came to, I've been looking into this strategy just to understand. I haven't done those yet, but there's a scenario, where you're leaving it to expiration, thinking, it's going to, both legs are out of the money, it is just going to expire worthless. There's a few videos that I came across, they were saying that stock as big as Tesla or Amazon, when it's pretty close to the out of the money, you think it's expiring worthless. There's still some time left where this closes, where you loses the ability, and one leg is actually, the short leg gets assigned. Where your long leg is pretty much gets worthless, right? In that case, so people have gotten incurred, like you're talking about. If you're doing one contract, you're talking 100 shares of Amazon or Tesla, just gets a margin call. So something that I came across, thought I'd just throw that out to be aware of,
Yeah, so what I've been doing is on things like, I have NVIDIA credit spread right now on the put side. I always set a closeout on that, I never let it expire worthless.
Yeah.
And the same thing on Amazon. Now for SPX, it's different in that SPX essentially, one, it's European style closeout, meaning that it cannot be assigned. And once the bell hits, that's it. It's expired. So it cannot be assigned later.
Yeah, that's good. As long as you're closing it out before expiry, then you're good. It's just one of those scenarios where you just think, okay, this is gonna get expired worthless, and sometimes the price moves drastically for certain news or whatever reason, like after hours, and then it could get just breached, that way. So,
Right. Yep. All right. Well, it looks like I have some more investigation to do with some index funds to see if I can actually play them a little bit better. Well, I think that's enough questions for me. So I appreciate all the answers, guys.
Hey, no problem.
No problem.
No problem. Anybody else?
I got one for anybody.
Sure.
How much wood could a woodchuck, if a woodchuck could chuck wood?
GME.
Probably.
That's a lot of wood.
Okay, I'm out of here. You guys have a good week.
Thanks, guys.
have a good one.
Yeah, we'll see y'all next week.